Okay, the ledger. We're going to be considering the golden rules of accounting. We considered this when we were treating the double entry principle. Just a kind of a recap or to refresh our memory about the golden principle. We're going to look at the golden principles, golden rules of accounting. We're going to start with the first account, the personal account. Personal account relates to individual companies or other entities. Like I told us in our previous video, I said we have two types of accounts. We have the personal account and impersonal account. And the impersonal account is further divided into two, which is the nominal account and the real account. So we are now considering the personal account. So personal accounts relate to individuals, companies, or other entities. How does this should apply to this account? The golden rule is that debit the receiver and credit the giver. The receiver will debit and the giver will credit. That means if an individual or entity receives something, the account is debited, and if they give something, the account will be credited. So let's take a quick example on this. Said received 20,000 naira cash from Jonathan Limited. You can see this question is a cash transaction, not a credit transaction. If it were to be a cash transaction, it will have gone through either the sales day book or the purchase day book. But this transaction is a cash account. Let's consider the two accounts that this transaction is going to impact on. So receive 20,000 naira cash from Jonathan Limited. Let's analyze this question. Receive 20,000 naira cash. That means we are receiving 20,000 cash into our cash account. Then who is giving out? Jonathan is giving out the money from his own cash book. So this item is going to impact in the account. We open the two accounts, the cash, Jonathan's account and then the cash account. Then now we have identified the two accounts that the transaction is going to impact on. So who is giving out and who is receiving? So we can see from here now, Jonathan is the one giving out because the money is from Jonathan. So Jonathan is giving out money, 20,000 with the narration, cash is narration to then 20,000 naira, and is one giving out the cash. The money is going out from his own purse. So the money is going to coming to our cash book. We are receiving the cash with 20,000 naira with the narration, Jonathan Limited, telling us that if we go to Jonathan's Limited account in our book, we are going to see the other side or the other half of this transaction. So that means Jonathan, our cash book is receiving the cash, which fulfill the double entry principle, says credit the giver and receive the giver. Here we say Jonathan is one giving out, and here cash is the one receiving. Okay, now let's consider the second one, which is a real account, which is a type of impersonal account. Real account relates to assets, both tangible and intangible assets. We know what an asset is. It's what the company owns with limitation of selling. The limitation of selling is what the company owns. It's tangible, what you can touch. So what is the golden rule for that? Is debit what comes in and credit what goes out. Anything that comes in as an asset, you debit. Anything that goes out as an asset, you credit also. What does it mean? This means when an asset comes into the business, you debit the account, and when an asset goes out, you credit the account also. So let's consider an example. Bought car for office use for 2 million naira cash. First of all, let's analyze this question. Bought car for office use, 2,000 naira, 2 million naira cash. What and what account is this transaction going to impact on? Because it must have two legs. So bought car for office use. The car that's going to be bought for office use is an asset. So you open a car account and also a cash account, because car will receive the car while we are giving out cash. So we have the first account, then we have the cash account, then the second account we have the car account. So from here, let's start posting. So bought car from, who is giving? Cash is giving out, while car is receiving. So cash is giving out, this cash is giving out, how much is giving out? 2 million naira. Then narration car, telling us if you go to car account, you're going to see the second leg of this transaction. So if you come to cash account, you see that cash is if you come to car account, you see that car is one receiving. It receives the asset with narration cash, and the amount is 2 million naira. Is that simple? When you are given a question, each line, just try to analyze the question and know the account that the transaction is going to impact on before you proceed. That is for real account. So the last we're going to be considering is let's consider the nominal account. Nominal account relates to income, expenses, gain, and losses. So how does the entry principle apply to this? Debit all expenses and losses. All expenses and losses you debit. Debit all expenses and losses, while you credit all income and revenue and gain. Debit this. Why are we doing this? So this means you debit account for expenses or losses and credit account for income or gain. Example, cash sales 1 million naira. Cash sales 1 million means you sold the goods and the customer paid you immediately. That means I don't even need the name of the customer any longer because our transaction has ended. I sold to him, he has given my goods, he has given me my cash, and I've given him his goods, so transaction has ended. I don't need his name, so it's cash sales. The two accounts that this transaction is going to impact on is the cash account and the sales account. The sales account can also be called the revenue account. So the two accounts that we have, the sales account, which can also be called a revenue account. Then we have the cash account. What happens? We receive cash, we give out goods. We receive cash, we give out goods. From the rule, we said what? Debit all expense or losses, then credit all income, revenue, and gain. Sales is like a revenue account. Sales is a revenue account. So we credit sales with 1 million naira, while we debit cash with 1 million naira because we receive the cash into account. Then the narration will be sales. Then under sales account, narration will be cash. Is that simple? I trust it. Any question? Okay, now let's look at this question quickly. Write up the following transactions in the book of Rogolos PLC. On the first, started business with 16,000 naira cash, out through to 30th, pay salary and wages 600 naira cash. So let's start with the first one. So we're going to be taking them one by one. As soon as we are done with question one, the first transaction, we're not coming back to it again. So let's start. Started business with 16,000 naira. Which account is this transaction going to impact on? And also, which one is receiving, which one is giving out before we go to the ledger. So it started business with 16,000 cash. So cash is one of the accounts. So the second account is capital, because what you use to start the business is called a capital. So you're going to open a capital account and a cash account. I already have it here. Capital account and a cash account. So now who is giving out? If you analyze this question very well, cash is receiving, the company is receiving the money to their cash account, while the person, the owner of the business, is giving out this money from his pocket, which is capital account. So capital account is going to be credited with on the first, we say narration cash. You give out cash. Cash, how much? 16,000. So come to cash accounts. First, enter here capital. Then how much? 16,000. Look at it now. Use narration cash under capital. Cash. Another cash under capital. While we use capital under cash account. We are done without the transaction. We're not coming back to it again. So let's move to the second transaction. Purchase furniture for cash 2,000 naira. Again, the two accounts this transaction is going to impact on is the cash account and the furniture account. It's the cash account and the furniture account. So let's open account for, we already have account for cash, so now we just open account for furniture. So let's open the account for furniture. I can just copy this account and paste it here. So let me just change the name here to to furniture account, some assets. So let's delete this one. So let's keep the transaction now. How much was paid for the furniture? We paid cash 2,000 now. We paid cash 2,000. So coming here, the date is on the 2nd, 2 of 1. We paid for furniture. We credit furniture. How much? 2,000. While we are receiving the furniture, so we come to debit side of the furniture account, 2 of 1. Here will be donation bought cash. How much is it? 2,000. So now we are done with that. So let's move to the second next line. Say purchase stationery, 33,500. Stationery, which is paper and writing materials. Stationery purchases and expenses. So the two accounts that's going to be, this is going to affect is around the cash account and the stationery account. That cash account and stationery account. So let's go and open the stationery account. Let me copy this again. Come down, this here. We'll call this one stationery account. We already have a cash account already. We need to open another cash account again, which is this. So the question said, let me delete this solution first. The question said we paid 3,500 cash for stationery. So cash is given out when normally we said before the expense account is to be debited. We debit expense account and credit, we debit expense account and credit cash account. So we come to cash account, and which date was that? On the 3rd of January. So you have let me add to this place so that I have more space for myself. So you have the 3rd of January, 3 of 1. You have stationery here. Stationery here. How much is it? Is a 3,500. So enter 3,500. So go to stationery account. Just make sure that you just post once and don't come back to it again. You have 3 of 1. Additional bought cash. How much was this? 3,500. 3,500 naira. So we are done with on the 3rd. We just pick it, shoot it completely, and we move forward. So purchase goods on credit from Malam Abiodun 5,000 naira. Purchase goods on credit. This one is not cash, it's on credit. And I told you that anything you buy on credit, you must go through the sales day book or purchase day book. So first of all, the two accounts that this is going to be part on is the purchase account and what? And Malam Abiodun account. Malam Abiodun account. But first of all, this transaction must go through the purchase day book because you bought it on credit. So first of all, let's go and do the purchase day book. Purchase day book, like I have this one, it says day book. So let's just use this place for it. Let me say purchase day book. Purchase day book. Purchase day book. We are saying purchase from who? From Malam Abiodun. So here I'll come in. Which date was that? It was on the 4th. So I'll say 4th of 1. 4th of 1. So 4th of 1. I'll put the person's name here. Malam Abiodun. Malam Abiodun. What do you buy from me? You bought from me boost. It was not explicit. You see boost here. Then how much was it? It was 5,000. 5,000. That is that. So that is that for that one. First, let's keep it there. Maybe before the end of the month, we'll see more goods that were bought on credit. So let's go back here. Like I said here, it's going to go up in part on the purchase account and Malam Abiodun account. So we need to open the purchase account and Malam Abiodun's account. So let me come here. Let me duplicate this again for the two accounts. So we have one. Let me see another one again. Another one. So I'll call this one purchase account. Then I'll call this Abiodun accounts. Malam Abiodun account. So let me come down here and then delete this transaction. So now, what happened here? It was a purchase of credit from who? From Malam Abiodun account. Who is giving out and who is receiving? But first of all, for the credit transaction, our advice, let's just leave it first. Let's get to the end of the month. If there are more credit transactions, we'll add them before we post to the ledger. So the next one here said 15th January, sold goods for cash 16,000 naira. Sold goods for cash. And if we sold the goods cash, then we receive the cash, we give out the goods. So the two accounts that each transaction is going to be part on is the sales account and a cash account. Here we say cash account will be receiving because you are receiving cash for what you sold, then sales account is going to be credited. So let's go open an account for those two. So let me copy this again and use it. So let me copy this video. So I say open account for what? For sales account. Sales. Why the now will be what? Open account again for no, you are not opening that account because we only have a cash account. We only have a cash account. So let's go back. Say we said sold goods for cash 6,000 naira. We only have a cash account, so only 9 is just the sales account. So let's go to cash account because we're receiving cash. That cash account up there, which is this one. On the what was the date? On the 15th of January, 15th of 1. What sales narration here? Because we're receiving cash. What was the value of the goods? 6,000. They will come to sales account. Don't need to duplicate cash account. So sales account 15th of 1. How much was what was it? Was a cash transaction with cash here. How much was this? 6,000 naira. So that is that for that transaction. So let's move further. On the 17th, says sold goods to Jonah on credit 32,000 naira. The same way that happened for on the 4th. It was a credit transaction. Here again, we have another one, which is a credit transaction of 32,000 naira. There was a sales of 32,000 naira on credit. So first of all, let's go and open the deal book for it because it's a credit transaction. Let me just copy this, bring it down, paste here. So here we have a sales account. So let me delete what is inside here. Who was it sold to? It was on the what? On the 17th. Bring in the date. The date, which is 17th of 1. To who? It was made to Jonah. Okay. What was sold to Jonah? It said boost. No detail, just to the boost. How much was it? It was 32,000 naira. Okay, now let's leave this one there. For now, when we get to the end of the month, let's see if we have more credit transactions. We bring them in before we post them to the ledger. What we are doing for the C transaction is just to record for now. So let's go back to next one. We said on the 20th, advertisement expenses 200 naira cash. This is an expense. I would say expense account must be debited. We said expense account must be debited. So let's go and open the expense account. We already have a cash account before. We need to open cash account again. So let's open the advertisement account. Let's use this advertisement account. Advertisement. Advertisement account. So now, who is giving out? So expenses will be debited, means that we are paying for advertisement. Cash is going out, so cash account is going to be credited, while advertisement is going to be debited. As we said, we were talking about the debiting principle for a nominal account. So on the 20th, you have your 20th of 1, 20th of 1. You say what? Cash. How much? 200. So we have a cash account before. Let's go to the cash account and complete the debiting principle. which is on the 20th one. What will appear is adverts. Advertisement, how much? 200. So that one completed. So let's move ahead. It said paid Malam Abiodun 3,500 naira cash. Pay past settlement of who's purchase. If you come back and you see that there was on the front there was a purchase from Malam on credit. Now we are paying Malam on the 25th. Abiodun 3,500 naira cash. Pay past settlement of who's purchase. Okay, now here now we are paying Malam back, so the account that's going to affect is cash account. The money is now leaving us in the Abiodun account to be debited because Abiodun is receiving the money. Normally we have a cash account already open before. We need to open cash account again, and also have Malam Abiodun account open before. I'm going to open Malam Abiodun account again. So let's go to Malam Abiodun account. So let's go up. That Malam Abiodun account here is what received the money now, which is 25th of 1, receiving cash from us. Cash. How much was it? We are making part payment. How much was it? Is 3,500, 3,500. So let's go back. Then the cash account, they're going to affect for the second leg. Cash account is going to be credited. It's 25 of 1. Gabriel Malam Abiodun. How much? 35. So we are done with that one also. So let's move further. The next one says paid rent in cash. When you are doing a business, you pay rent for it. So cash is leaving you, while the expense account, which is rent, is going to be debited. The two accounts is cash and rent. We only have cash account before, so let's open the rent account. Let me copy this to save time. So I post here. Here I have what? I have rent account here. Rent. So you paid rent. It's an expense account. It's expense account. All expense account must be debited. So we have expense account 28. So you have 28 here. 28 of 1 cash. You are paying cash. How much is it? 300. Well, we'll go to cash account and we'll complete the other half of the entry principle, which is how one was that. This should be 28 of 1. What we are paying here is rent. We go over what we are paying for. How much is it? 300. So let's continue. Then the last one there, we have last question. We are done with 28. On the 30, we say pay salary and wages, 600 naira cash. Salary and wages is expenses also. If an expense account is going to be debited, while cash account, we already have the account before, is going to be credited. So open the salary and wages account. Salary and wages account. Let me copy this one to save time also. I'll call this salary and wages. Salary and wages account. Like I said before, salary and wages account is an expense account. What you pay your staff. So you're going to debit it with 600 on the 30th of 1. There will be cash. You are paying cash. How much will be 6,000? So the 600, sorry, 600. So the other leg will be going to the cash account. Let's go to cash account, which is that bit here. So here will be cash account. We have the 30th of January, 30th of 1. What we have here is a salary and wages. How much is this? 600. So here we have a 600. So all transactions will be properly entered here. So now we have two transactions. Now we are done with all the transactions. So now let's go back to the credit transaction, which we say we are going to come back to later after we are done with all other transactions. So let's go to our sales. We don't have anything to do with this question. We are done with it. So let's go back to our ledger. So now we need to transfer from the purchase day book to purchase account, then from sales day book to sales account. We don't have another credit transaction. So let's sum up here. We sum up here to give you total what? 5,000. So here we have total 5,000 also. So we say what transfer to, or we say post to the ledger, post to the ledger, to sales ledger, not to purchase ledger. So then I'll come here to be again only one transaction, the same thing, 32,000. The total here is the same 32,000. That will say transfer to what? To sales ledger or sales account, which is sales account. Let's go call it sales account. To sales account. So let's do the first one here. We have Malam Abiodun, person we bought from on credit. So we are owing on that Malam Abiodun 5,000, while our purchase account receive 5,000. Let's go to purchase account now. Let's go to our purchase account. To our purchase account, we are receiving the purchase. Now we are receiving the purchase. How much was this? 5,000 on the first? Was on the first. Let's go to the person and check. Purchase was on the 4th, sorry. It was on the 4th of 1. So let's go to purchase account back. They have 4th of 1. What happened here? We'll just put sundry. That means there are many. You can just put sundry to represent all of them. So putting their name one by one. So how much is there? How much was it? It was 5,000. So I'll capture 5,000 here. So the other leg of this transaction will come to what? To Malam Abiodun account, which is 4th of 1. What was how much it would be purchased? Because the goods left Abiodun and came to us, 5,000. We are done with the first, we are done with the purchase ledger. So now let's continue. Let's go back to the other one. Says the book. You are Jonah, we sold to Jonah. So goods, our goods left while we are expecting cash from Jonah in future date. So let's put this into sales account. Let's go to sales account. Sales account. Yes, you have sales account here. Oh, so I did open account for Jonah. We need to open account for Jonah. We did open account for Jonah. We need to open account for Jonah. Where is Jonah? Our sales account here. We need to open account for Jonah. So let me just create space for it. Open account for Jonah. Because Jonah is owing us now our debtor. So let me change this one to Jonah. Then let me delete this. Like I said, in the sales account. So let's go back. The sales account says the book Jonah. We talk to Jonah. Then we are expecting from Jonah. So sales revenue account, like I said, is going to have it's going to enter to the credit. So I sales here. When was that? You can just put to be that you are summing everything up. You can just put end of the month because it's sundry. Just put the 30th of 1. There are sundries. Then we have how much was it? 32,000. Sorry, 32,000. Then we'll come to Jonah account because Jonah is showing us. Put the date that Jonah's will occur. The transaction is on the, it happens which date? On the 17th. 17th of 1. What will be with sales? What is it? 32,000. So we are done. That is all with this question. We have solved the question. If you are fast enough, you can finish this question within the space of 5 minutes. That is speed and accuracy. So you have recorded these transactions in a book of Robonos PLC. This allows us to write all these transactions in the book of Robonos PLC, which we have done. I would like us to balance these accounts. Okay, now let's quickly balance these accounts. Let's quickly balance the account. The first area we have the capital account. Let's balance it. This is how to balance account. You consider the credit side and the debit side. This is the debit side, this is the credit side. which one is higher. As you can see, there's nothing in the debit side. We only have the credit side, 16,000 naira. So you come here and enter 16,000. Then also here to be 16,000. So there's nothing in the debit side. So here we have what? To balance the other side, you have to see balance carried down of 16,000. So should be balance brought down of 16,000 naira here. That account has been closed. Let's go to the other one, the cash account. We have debit side 16,000. We have debit side 16,000. And this, we have this credit side this amount. So let's add up these ones together from year to year. How much we have? Here we have 10,100. 10,100. Compared to this side is how many? How much is 22,000? That means the debit side is greater. So we enter 22,000 here. 22,000 here also. So the balancing figure is going to appear here. So you have 10,000, this minus this, that will give us 11,900, 11,900, which is the balancing figure, which is what came in balance carried down. It tallies up. If you add what is here together and everything here together, that here, it should give you the same 22,000 naira. So let's go to furniture. The same thing, you close the account, not on the credit side. So we only have on the debit side 2,000. So we say balance carried down is what? 2,000. Which is what to balance brought down here for 2,000. So that account has been closed. So here we'll come here again for stationery, nothing on the credit side. So here will just be what? 3,500 to balance it. The account has balanced. The next one, purchase account, we don't have anything on the credit side, only have on the debit side. So the balance will go be what is on the debit side, 5,000. Now as balance up, balance carried down, balance brought down. So we go to Malan. We will pay part of Malan's account. So if you look at check the both sides, we have both side is greater, 5,000 credit side is greater, then debit side is lower. So you have to balance this and this debit side to make up, to add up to 5,000. So we say come in write 5,000, which is the greater one. Come here and enter the greater value, 5,000. Then here, what is the balance figure to make it 5,000? Is 1,500. So balance carried down, balance brought down. Come to sales account, the same thing. If you add up sales account here, we have how many? There's no debit side, so 36 plus 36,000 plus 32, we have 38,000. So the balance figure was 38,000. Balance carried down, then balance brought down. So let's come to journal, the same thing, only credit side 17,000. So 32,000 here, we have 30,000 here. Balance figure 32,000. Balance carried down 32, brought down 32. So advertisement, the same thing, only debit has value. So credit side empty, the balance figure for the credit side will be 200. The same thing coming to rent, balance figure will be what? 300. We come to salary and wages, debit has value, credit another value, balancing figure to what? 600. That is all. That is what they required us to do. So if you have any question or anything at all, you can drop it on the comment section and I'll attend to it. Thank you very much. Okay, we have come to the end of today's lecture on the ledger. So we have completed the ledger where we applied the blockchain principle, the debit, the receiver, and credit giver. I also say that all expense account must be debited, while revenue income account must be debited, losses must be debited. So that is where we end for the ledger. The question we provided answer to, we are going to use it to prepare trial balance when we get to trial balance. So that is all for now, and if you know that you have not subscribed to this YouTube channel, please kindly do so by clicking on the subscription button below, and also inform others to benefit from what we are learning here. And all those who have subscribed to this button, I want to appreciate you and thank you very much. In our next session, we're going to be considering the cash book, the types of cash book. We have the double color, three color, and the 15-year cash book. See you there in our next video. Thank you.